Hello, very good morning to you all. I'm happy to be with you guys today morning. Um, it's been a while, and it's good to be back with you guys for the market snapshot. Today we have quite a bit to go through, and of course we are going to be reviewing quite a bit of information. We shall do a quick review also on last week FOMC and see what were the main things that took place or that were shared from that FOMC conference. And in addition to that, we also have the Australia interest rate decision, which took place today during our Asia session. So we shall be going over some of the things that were provided from that interest rate decision. Yeah, so my name is Norbert Kiza, and I'm an education partner for FX Pesa here in Uganda. And of course, again, guys, it's always a thrill to be with you guys for this snapshot. And I hope the chats are going all well with you, that trading is moving well, and you guys are actually profitable and you're making some money. Yeah, so we are starting with Australia interest rate decision. So today the Reserve Bank of Australia met, and of course, the main thing that we can take from the rate decision was it was a bit of a hawkish decision. And some of the data we saw, and of course, some of the commentary from the MPC, which is the Monetary Policy Committee of the Reserve Bank of Australia, indicated to us that there are likely signs that they are going to stay hawkish. And of course, the reason for that has that of course the inflation is still looking still persistent, and they want to keep the rates anchored to help to come and to bring down that inflation. So now the other thing, of course, that is going to be some of the things that we're going to discuss today is likely to do with the currency pairs. If you're trading Euro USD, GBPUSD, and of course some of the measures, how can you plan for your trading as we go into the next phase of the markets, which is going to be because we are inching now closer to Q2, rather to the second half of the year. Once you cross June, which is the 6th month, we are going to be in the second half of the year. So we shall be going over some of those currency pairs to see. So today we are having a relatively bullish Australia dollar on the back of a fairly hawkish pause from the from the Reserve Bank of Australia. They kept their cash rate at 4.35%, and of course they have kept the rate constant from the last hike they had, which was in December. And of course, the general trend we are seeing with most of the central banks is that a lot of them seem to be crossing over to their next phase of policy, which is rate cuts. But now it's going to come down to which of the central banks is going to be more dovish than the other, which of them will be more hawkish than the other. Now, for now, we should see some bullishness for the Australia dollar on the back of that hawkish pause from the Reserve Bank of Australia. Now, last week, I'm sure most of you were aware that we had the FOMC. Of course, I was not around for the market snapshot, but having reviewed some of the data and of course some of the information that was shared, essentially the main takeaway from last week's FOMC was that the Federal Reserve announced that they're going to start tapering on their quantitative tightening. For those of you that do not know what quantitative tightening is, it is just something simple. It is just a simple English word that means making financial conditions a bit restrictive. If the central bank wants to reduce the amount of money in supply because they want to maybe make conditions or financial conditions restrictive, they will do what we call quantitative tightening. So the Federal Reserve announced the start of quantitative tightening in 2022. And if you recall, that was a time when inflation was quite high. And the reason why they started that QT in the first place was to bring down that inflation. So the QT, which the Federal Reserve has been doing, has taken a period of about 2 years. We're in 2024, so 2022, 2023, yes. So I would say 2 years and a few months, okay? And now tapering is essentially meaning that they want to cut back and they want to start crossing over to to start the phase of rate cuts. Okay, so that announcement which the Federal Reserve announced, which was QT tapering, they announced that last week. They said they are going to begin this process in June. Okay, they're going to begin this process in June, and what that means is that they're opening up the door for interest rate cuts. Right. So the moment they start this, it's just an indication that we're going to see the interest rate cuts beginning, and we should then see a lot of risk on assets, things like GBPUSD, EURUSD, gold. Some of those are going to undergo a lot of upside momentum on the back of the tapering. Now, that's one of the key highlights from the Federal Reserve Conference. And of course, when you cross over to the charts, you guys will be able to see how the market responded to that news that we had. Now, it's also important for us to review the CME Fedwatch tool. The CME Fedwatch tool essentially is just for us to see what are the probabilities of rate cuts that we can expect from the Fed. And at the moment, the next meeting we have is going to be in June, right? So in June is when we have the next Federal Reserve Bank meeting. And we consider they're going to be meeting on the 12th of June, right? So they met last week on the 1st of May. Now, we're now in May, and June is next month, right? So they are meeting next month. They're meeting next month on the 12th of June. And at the moment, we are still seeing that there's a likely rate hold. Rates are going to be held, but the market is going to rally into June, I'm expecting. So if you're trading things like stocks, if you're trading indices, expect to see some upside momentum on those assets, especially since the Fed has said they're going to start tapering. Now, if you go to 31st of June, the 31st of June meeting is showing that the Federal Reserve is also going to hold rates, but we consider the percentage substantially reduces from the previous month, which is from 91% to about 68%, indicating to us that now the market is likely is going to start pricing in rate cuts soon, and we are going to be seeing that with those changing percentages. So the main question for most of you, of course, is when is the Fed going to start cutting rates? So the earliest, I believe, is either going to be, we might get a surprise cut in July, in their July meeting, a surprise cut. Surprise cut meaning that whereby we will not be expecting them to cut, but then they actually do the cut, okay? So that's likely in July. If they do not cut in July, then definitely they're going to cut in September. So that means that if you're trading the dollar, the DXY, as you'll be able to see, you can expect that the dollar is going to start selling sometime, especially as we go towards election time. We are going to see a potentially weaker dollar between that period of May. We're now in May. Between June to September, that's when we are going to see that dollar index starting to pull back as we get ready for election season in the US. Now, looking at the economic calendar today, the main data we had today, and of course the main event we had today was Australia Bank, which met today at about wee hours of the morning, 4:30 a.m. East Africa time. And of course, from that meeting, they kept the rates on hold. I've already indicated to you that it was a hawkish pause, and that's the reason why we are seeing a fairly, yes, we had a bit of a sell on the Australia dollar, but we are seeing it now recovering, and we're expecting that we should potentially see a stronger Australia dollar as we go into the course of the day. Now, we also have a number of Fed speakers, but the Fed speakers, I do not expect we are going to see a lot of comments from them that will impact the market as much. So which means if you're trading today, you mainly have to focus on what the price action is presenting to you and how you can trade and how you can seek opportunities from that price action. Now, crossing over to the dollar index, this is how things are looking like for the dollar index. So for the dollar index, what I've done is that I've decided to divide the chart using what we call a PD array. Okay, so a PD array is essentially just a premium and discount zones for you to see how the dollar index is doing. Of course, today our major focus is looking at some of the various currency pairs like AUDUSD, GBPUSD, EURUSD, but most importantly, the dollar index, okay? Because this essentially allows us to tell how we can then trade our other currencies. Now, I've put a PD array on the dollar index to divide for us our premium and discount zones. The reason why I've left out this area outside here is simply because the, the factors that took the dollar this high or the dollar index this high, those factors are no longer in play at the moment, okay? We had a period where inflation, actually 2022 was dubbed the year of great inflation, okay? Great inflation. Inflation was extremely high in the US, had reached to double digits, and it then provided us a fairly strong dollar. Now, I'm expecting that we are going to see the DXY starting to pull back, especially since the Federal Reserve has announced that tapering. We are going to see a fairly weaker DXY. And of course, we continue to see weaker inflation in the US. That's also going to support a weaker dollar index. Okay. So at the moment, we are trading in a premium area that's around this level towards 107, but we should see the dollar index starting to sell possibly back to this area here where we have 103. And should that continue, then I expect that we're going to have something like this happening over the next few coming months. And we should then see by June that DXY should possibly be trading below this area here. And we should see it trading closer to 99. Those are my thoughts for the DXY, okay? But again, guys, it's majorly going to depend on data. The last time we had a US election was in 2020. And as you can see, keep in mind as traders, you need to make sure that you are aware that past performance is not indicative of expected future performance, okay? So it does not mean that if we saw a weaker dollar index, that means that we're going to have a weaker dollar index this year. Sometimes, you know, things may not turn out as you may expect. So now, 2022 was COVID year, right? But also it was an election year. And typically, if you do your back testing, you'll find that during election years, the dollar index doesn't normally do that well. So this is what we saw around May. The dollar index began a very nice downtrend that took it all the way down here. And I'm expecting that downtrend is also going to start during this year, which is also an election year. And we should see the dollar index making its final high soon. So the final high is going to come sometime soon. We're not so sure of when exactly it will happen, but when it does, we're likely to start on that downtrend trajectory that will take us all the way down here over the next few weeks. Now, this time frame, for those of you that may not be aware, this is the daily. So it speaks a lot about what's likely to happen. And we should then see things as we progress. Okay, so if you have any questions, guys, now may be the time to send in your questions as we cross over to the next phase of our discussion, which is going to be looking at the charts. Okay, so let's cross over to the MT5 and see what's happening over on. Okay, so we're going to start with the AUDUSD. So for AUDUSD, this is what we have. At the moment on the H1 time frame, we have a descending condescending wedge, which is typically a sign of bullish momentum, rather bullish momentum. And essentially how you trade the descending condescending wedge is that whenever you have price looking like it's moving to the downside, you can expect that you can expect to see price recovering to move higher. So at the moment, I've drawn my fib levels, and we are seeing that there are some points of supply on this particular chart, which is somewhere around here. Okay, so now we are saying that what's happening right now with the AUDUSD is that it's experiencing a bit of rejection along these levels here, but the areas of supply are where my fib level is at the bottom here, and it's also where we saw price. Every single time price was moving out, it kept moving back into that area there. So now, when we had very strong demand along this area here, we saw that price actually moved higher. And from today's AUD or Reserve Bank of Australia announcement, we also saw that price again entered that supply area, but it wants to test it again. So I'm expecting that we should see a nice move to the upside on the AUD/USD that should take us into this zone, okay, over the course of the day. We're also seeing that if you are to go in for a trade on AUD/USD, what you can do is essentially just you can look for some buys here that could look to the break of that descending condescending wedge. So for those of you that don't know about this wedge, it's typically drawn in this kind of fashion. Okay, so whenever you have lower lows on this end, okay, and then you have some kind of lower highs, essentially how you're trading it is that you're looking for buys that you're looking for buys at the break of the upper part of the wedge, right? So essentially, when you're adding your fib level and where I've added it is that wherever you find price within your wedge, the best area for you to buy it would be, at least if you look at your fib level, okay, on your chart, you want to buy closer to the bottom area of the wedge, looking for a potential move to the upside. So you'll notice that we've been having some bit of upside momentum on AUDUSD, okay, right from 18th April. It's been presenting higher lows, and you can see even from today's Reserve Bank of Australia conference, we did not have that much of a bearish reaction, and it's still showing signs of some kind of bullish momentum. So we should then see a potential move to the upside. However, where price is sitting at right now, according to our fib levels, it's already above 50% of that fib box. So the best areas to buy would have been closer to this level here, around here. But where it's at right now, you could still potentially go in for a buy and aim to take out that supply area, which is around this level here. Now that's for AUDUSD. Now crossing over to gold, this is what gold is doing. So yesterday, of course, I traded gold, but my trades on gold since yesterday have been buys. I've been focusing on only buys. On one hand, because of the kind of price momentum I'm seeing, price action I'm seeing with gold, gold is in a steady uptrend. So last week's price action with gold from the NFP, the NFP was easy to trade. For those of you that attend my classes, the virtual classes, I always ensure that I tell you guys that when you're trading news, ensure you're using stop orders, right? So stop orders, how you trade stop orders is that you set buy stops and sell stops, and you give a certain degree of distance so that in case price moves to the upside, you're looking for it to break your buy stops and continue rallying. So if you had buy stops on gold on Friday, you would have actually been able to make a decent amount of money from the FOMC, because rather from the NFP, because we had a move right after the NFP data. Gold had a move of about 240 pips that took it all the way up to this area here. So you just simply had to have your buy stops here, and your trades are going to be executed, and you're going to have your trades moving all the way there. So I had my buy stops, and I was actually able to make a decent amount of money with my buy stops on gold, simply by allowing price to move to the upside. Now, where's gold moving at right now? If you look at gold on a H1 time frame, one thing is for certain. If you guys recall, I told you that there is a lot of demand for this particular asset that is seated around this area here where I have shaded. So if you recall the FOMC, rather the NFP we had at the beginning of the month, we saw that gold was actually able to hold price action here, and it moved to the upside. Okay, rather the beginning of April, that was last month. So on Friday, when we had NFP, gold was unable to break this area here. It tried so many times, but it failed. And we had a number of liquidity sweeps that were also allowing gold to hold price action here. Now, in addition to that, the the data we got from NFP was actually dollar bearish, right? It was dollar bearish. That is why we saw GBPUSD rallying, EURUSD rallying on Friday last week. Most of all the things that trade anti-dollar were actually rallying last week from that week NFP data. Okay, so the structure for gold has been showing that we're having a move to the upside, and that unless we take out demand in this area here, gold is not going to start selling. I know a number of traders are trying to trade and sell gold, but it's not showing us that much of selling momentum. And you can see the kind of price action we're having. So trading gold today, this is how I would look at gold, trading gold today. For today, I would look for buys on gold, potentially to this move to the upside here, possibly to 2,357. If I switch into sales for gold, or to get any kind of confirmations for any sales on gold, I might want to observe how gold performs in that demand zone. The moment I would have to set my sell limits at 2,300, rather my sell stops at 2,300. And in case gold breaks 2,300, I would then have my another trade maybe around this area here. That's if I'm selling gold, right? Now, if we take out this demand zone, then it just simply means that gold is going to open up for areas this down here. But at the moment, we are not seeing signs of that. Gold is looking relatively bullish, and the next level for it is most likely up here of 2,357. So fundamentally, we have a bit of data right from data such as data like the FOMC data we got, the QT tampering data, things like this are indicating to us that there are signs of there are likely signs of bullish momentum for gold, and I think that is also going to play out in price, and we should see gold moving higher. Now, crossing over to GBPUSD. GBPUSD, if you guys recall the last time we met, I had mentioned to you that GBPUSD was in some kind of a bearish channel. And if you go on the H4 time frame, the H4 time frame will show you that there are also signs of a bit of a range for GBPUSD. But you'll notice that from the last time we had this review for GBPUSD, it has failed to break below this area here. Okay, and I have my 100% fib level marked there. So you can see that we did not break below that level. And now what we have been observing is that we have seen it going back into that area, okay, where we have our tight box, okay. So now the kind of price action and momentum on the H4 time frame is bullish, okay, and the reason for that is simply because of the data we got from NFP, which was actually dollar bearish. But in addition to that, GBPUSD is having signs of bullish momentum with higher highs and higher lows, and this should continue in case the data allows for it too. So how are we going to trade today? So for today, I would be looking for potential buys on GBPUSD, possibly to the 50% fib level at 1.26. However, if we see price breaking below that golden ratio, which is around here on the H1 time frame, then it's likely going to open doors for GBPUSD trading lower. And if we also happen to take price action below that 200-day moving average, so this is my 200-day moving average, and whenever price action breaks below the 200-day moving average during the day, it's a sign of bearish momentum. and could also tell us that maybe price is starting to reverse. Okay, so I would look for buys on GBPUSD and set my stop loss maybe about 20 to 30 pips below my golden ratio. Just in case price breaks below it, then ideally I would then go in for buys. Rather, I would go in for sales and sell it at least all the way back to where it was on the 2nd of May, which is somewhere around here. Okay, so that's how I would approach GBPUSD trading today. Now, going over to the VIX. So the VIX is the fear index. And for the fear index, this is how things are looking like. The fear index has presented some kind of a descending wedge, but fear has kind of is really subdued at the moment. It's very, very subdued at the moment. I'm not seeing a lot of fear in the market. I saw some news yesterday about China. What is it? China actually hacked the UK Ministry of Defense. Of course, that has nothing to do with the markets. But what I can say regarding that is, the world is a very interesting place, and I don't know how the UK Ministry of Defense ends up getting hacked by China. But that has nothing to do with the market. Meanwhile, guys, that's just a by the way. Okay. Yeah. There's not really, everything is really, I would say, quiet on the front of the geopolitical tensions and all these different things. So that, of course, is not showing us any kind of reflection here on VIX. So then it means if you're trading indices such as myself, like the US indices, I don't have any setups for them today. But that strong bullish momentum we are seeing on the US indices has a lot to do with that subdued fear. Now, EURUSD, this is how USD is looking like on the H4 time frame. We were in a tight range, same thing like GBPUSD, descending channel. The descending channel then switched sides to a rising channel, which I have drawn around there. And at the moment on our H4 time frame fib levels, we are almost entering into premium zones. As EURUSD was able to break above the 50% fib level, somewhere around here. I think this was NFP. So at the moment, I would look for potential buys on EURUSD. I know that the ECB has indicated that they are going to start cutting rates in June, but since the Federal Reserve has also indicated that they're also going to start tapering soon, I think these are signs of dollar weakness. And how that's going to translate for EURUSD is that we can expect to look for buys. So for trading today, this is how I would go about it. I would look for potential buys on EURUSD, and I would be setting my take profit levels closer to the 50% fib level, which is currently around this is about 41 pips from where price is at the moment. And then I would set my stop loss closer to my golden ratio level, which is somewhere around here. Okay. In case price action actually is bullish, rather bearish, and starts trending lower, then we are most likely going to come back to where we were around the 2nd of May. That's the same thing I'd also mentioned to you for GBPUSD. If we do not manage to hold this level, well, if we manage to hold this level, and basing on the kind of price action I'm seeing, it looks fairly bullish and it's showing signs of some upside momentum. So we look for buys. If again the buys do not work, then we should be taken out of our trades somewhere before that 61% fib level. So that's it. That's it for me, guys. I think I've covered everything that I need to cover for the markets review, and of course, tomorrow we are going to go over even more things. So if you have any questions, now may be the time for you guys to ask questions. I also want to mention that FX Pesa has launched. We have launched a series. Okay, this series is available on our YouTube. So we have launched our new FX Pesa Academy series, beginning with how to get started with FX Pesa. So if you're here, you're a newbie, you're just getting into trading, you want to know where to start from, here is your answer. You can simply go on FX Pesa's YouTube and you'll find the video there. The video is called How to Get Started with FX Pesa. So it's just a walkthrough from the first steps all the way to getting your trading, up to where it should be. And you can find it on the YouTube channel. This is whereby we take you through the using the FX Pesa app, from linking your MT4 to MT5 to your portal, and what you can do with it. This week, we shall also have a video on Friday, which is called RSI and moving averages. So it will be to take you through RSI and moving averages, and it's going to be covered by Samson Mzera. Awesome. Question time, guys. What is your bias on the dollar after the weaker NFP? My bias on the dollar is Malombe. How are you doing? Uh, good to see you. It's been a while, Mr. Malombe. I hope you're doing awesome. Yeah. So the bias for the dollar is actually bearish after the weaker NFP, and I'm expecting that we should see a relatively weaker dollar. If we get more data, that's indicating to us a relatively weaker data, then we should see the dollar even get weaker. And of course, since the Federal Reserve has also indicated that they're going to start tapering, it's also giving us signs that they are going to start cutting rates soon. Okay, very very soon, and that should reflect on the dollar. Gold, I think I've touched on gold. WTI, I've taken a while. Nixon, I think let me come back to you on WTI tomorrow, during tomorrow's market snapshot, because I'll be with you guys tomorrow as well. Let me come back to you on WTI tomorrow. I have absolutely no analysis on WTI at the moment, so I would not want to give you stray bullets on that. So let me come back to you on WTI. But for gold, just like I've explained, we have demand within my shaded green box there. Price action is showing us that there are a lot of that area, indicating us that there are signs of bearish momentum, bullish momentum for gold. Okay. Timothy, you're asking, what's your thought on AUDUSD as a perfect pair for scalping? AUDUSD, I don't have so much insights for USD, but I can say based on a got from the Bank of Australia today, their commentary was very very hawkish. They had kind of like a hawkish pause, and that's why we are seeing some bullish momentum there. We should then see price potentially moving higher, and we should see it breaking above that supply zone, closer to that 0% fib level of 0.66. Okay, next question. Please highlight on how to apply Fibonacci kindly. Yeah, so for me, how I apply my Fibonacci is I apply it so that I can get my premium and discount zones, something that I've learned to do more recently, because it has actually helped me a lot with my swing trading. So I will get my fib boxes, I'll get my fib, and then I'll add it to my most recent low, which is closer to the supply area rather than demand area. And then I will also then mark it up to the high. Okay. And the idea for adding a fib is so that I can then get potential entry and exit. Okay. Right. So that is why we have the fib there. So ideally, how you use the fib is that if you have price trading maybe in the midpoint, which is around the 50% fib level, then ideally it means that you should be looking for buys to your premium zones. Okay, so that's how for me I use my fib. So I'll use it on my MT5 for swing trades, and then I also use it on my trading view so that I can be able to monitor in real time where price is at any given time. Okay, whether it's in a key premium zone or it's in a key discount zone, and how I can look for trades into those zones. Okay. Yeah, so that's how I use the fib, and you can see how to utilize it. Okay, next question. AUDUSD daily time frame. So AUDUSD daily time frame. Let's see what's happening over on a daily time frame. Okay, so this is how things are looking like. Again, the descending condescending wedge is actually quite visible. Maybe I need to just remove my fib so that I think you guys can see this in a much better fashion. So this is what it's looking like. Okay, we had price in some kind of a descending pattern, but it entered a demand area here, which was around the 22nd of April. When it entered that zone, immediately we've seen price moving into some kind of a rising pattern, and it's moving all the way there. Okay, so at the moment, what I would advise is you need to observe price action. How are we going to fare along the upper part of the wedge? Okay, this line here, how are we going to fare along that level? If, for instance, price manages to break above there, then ideally I would be looking for buys, or I would then set my buy limits in a way that if price comes and tests those levels there below this level here, my buy limit would be triggered, and then I would have my trade going all the way up here. Okay, yeah, but there are signs of bullish momentum. There are signs of bullish momentum. You can see also how structure was able to trade around here. You know, you had 1, 2, and then another full body candle that took price action all the way here. And there are still signs of bullish momentum. So we should see that playing out over the course of the week. Okay. Next question. J Squad, it's been a minute. How have you been, Mr. J Squad? You've been missing out. You've been MIA, J Squad. It's good to see you back. Where can I view this order book? Order book. Apollo, I think I didn't understand that question. What do you mean? Where can you see the order book? Yeah, J Squad, good to have you back. You know, I'm also back myself. Just actually got back today. I actually just got back today. Uh, J Squad, I didn't quite get you with the order book. Eh? Do you mean the order book? Are you talking about maybe like the order flow for like the orders that are coming in? I don't know whether that's what you mean. Uh, JPY Clinton, let me get back to you on that tomorrow. Clinton, make sure that you don't on a snapshot tomorrow. We'll go over that tomorrow. Yeah, JPY Clinton. There was someone else asked about WTI. Yeah, just stay tuned for tomorrow's snapshot. We'll cover that tomorrow. Okay. All right. Guys, if you don't have any other questions, I think that's it. I wish you all an amazing trading day. Let's continue from where we stop tomorrow, and I wish you guys all the very best. Cheers, guys.